Welcome back to another video, everybody. We have a lot to discuss in this one. We have some very important economic data to cover. We also have some interesting comments from Tom Lee as it relates to these inflationary pressures coming from these tariffs. We have a lot of these FOMC members coming out and being in support of a July rate cut. We have a very important deadline coming up in about 12 days. And as always, we're going to be covering some of the most relevant pieces of news, as well as the short-term charts on some of your guys' favorite names, Palantir, Sofi, HIMS, and AMD, to give you guys a good expectation of exactly what to expect next. So before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you're subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. And as always, I think you guys get the point by now. Massive shout out to all of the members of my private trading and investing community, Less Trades, More Profits. You guys have been on an absolute tear. I am super happy that I'm able to help you guys each and every day, every week, every month, really change your guys' performance in the market there. Now, again, for those of you guys that do want to hop in and take advantage of the best sale that I'm ever going to offer, the sale ends this Monday. It's 50% off your first 2 months to the group. Use code June with that link down below. Again, it literally only comes out to $1 a day. But without further ado, guys, let's roll this Tom Lee clip here, and then let's get right into all of this really important info.
Tariffs are actually a tax. So I want to give you a thought exercise. Let's say the US government wanted to raise $200 billion in tax revenues, and that's roughly what we're seeing currently with the tariffs. And they have two ways to do it. They can raise taxes directly by $200 billion, or companies can raise prices by $200 billion, but the government will tax that amount. So in other words, they're still going to get their $200 billion, but it's either from taxes directly, or they just have companies raise the prices. Well, think about it this way. There's no way the Fed would view a tax increase of $200 billion as inflation, because they would argue this is a risk to consumer spending, and actually they'd be dovish. But here's the thing. If the companies are raising $200 billion and then giving the money to the government, that's also not inflation. They would actually view that as a risk to consumer spending, and they'd be dovish biased.
So as we can see there, Tom Lee is now being more vocal than he has been in prior months here in his thoughts that, again, inflation is not going to massively move to the upside here as a result of this new trade policy and these tariffs, even though this is the exact opposite of what we have been told from these economists and these FOMC members really over the last 6 months here. Now, again, this is something that we've been talking about on this channel a lot, and we're going to kind of continue here and talk about the big picture, about what this actually means for the overall market going forward, especially with this big trade deadline looming in the near future. So the first thing that we saw today was US GDP for Q1 officially ended up at negative 0.5%. Remember, the drastic move down that we saw in GDP in the first quarter was mainly a result of a lot of these corporations here thinking and listening to a lot of these economists in their thoughts that inflation was going to move to the upside here, or prices were going to go up as a whole. So what did they do? If they needed to go out and import a lot of these goods from worldwide sources, they ended up doing that in the first quarter, and that's why we saw imports significantly go up and dragging GDP down. Now, in addition to this, when we move over here, we can also see, again, just thinking about this as a whole, we have GDP potentially slowing down, some growth prospects slowing down a little bit as well. We're seeing continued jobless claims, which again is a good reflection on where the unemployment rate could go, continuing to move to the upside, and we're also not seeing inflation aggressively move up either. Now, in the only part of that would be very worrying for an overall economy and the market here would be if inflation started to move back to the upside, because if you had slow growth, high unemployment, and high inflation, again, that is a stagflationary environment and a very difficult place to navigate for a Federal Reserve. But that is not what we are seeing, and that is why we're seeing some of these Fed governors over here like Waller and Bowman say that they could cut rates as early as the July meeting. And when we move over here, again, Bowman supports a July cut. Should inflation pressures remain contained, I would support lowering the policy rate as soon as our next meeting in order to bring it closer to its neutral setting and to sustain a healthy labor market. So now that we have rate cut expectations slowly moving to the upside, obviously the market is going to view that positively. And even with these rate cut expectations moving up, well, again, the bond market isn't really worried about this as well, as we are seeing that continued bid for bonds as the market starts to price in more cuts now, which is a positive sign. If we saw the opposite starting to happen, very similar to my last big bond call here, the day before the first rate cut, if we started to see interest rates in the treasury market moving significantly to the upside after or ahead of these cuts, that would be a cause for concern. But right now, the bond market is looking relatively solid as that bid is starting to come back. But we do have another very important catalyst coming that could actually turn into more of a medium to longer term catalyst here. Something that we've been talking about a lot on this channel over really the past 2 weeks here, especially when this Middle East conflict was starting to heat up aggressively, was that yes, the market is going to look more towards those conflicts and those escalations first before they look at what's happening with the broad market in the short term. But if we do see some sort of de-escalation here, which we absolutely have seen, the market is going to look more towards the developments with these trade talks, and that is what a lot of people are starting to look for. And the Liberation Day tariff pause ends on July 8th. So there could be a little bit of volatility that comes along with this, but we are seeing these types of reports. White House signals July 9th trade deadline may be extended. White House Press Secretary Caroline Leavitt said the July 9th trade deadline is flexible and could be extended. President Trump may impose reciprocal tariffs on countries that don't reach deals by then, but could also offer terms unilaterally. Now, if we end up seeing this trade deadline get extended here, that provides even further of a runway for a lot of these deals to come out. And when those deals come out, we do see markets react positively to them. So I would say that deadline extension would be viewed very positively by the market at this point, as long as these tariff rates don't drastically move back to the upside. So let's start getting into a couple of these individual names here, guys. Some of the ones that you are very interested in, kind of recap what we've talked about with these ones so far and give a nice little roadmap of what to expect moving forward here. So Palantir is the first one, again, reaching new all-time highs today. What we did talk about with this name is that coming into this week, we did have a very strong short-term bullish setup here. Now, I did also outline that this is not going to be one that I'm going to look to take advantage of, mainly because this valuation is getting a little bit stretched. And when we do see these moves to the upside, a lot of these institutional holders and potentially some retail as well are going to start to take profits on this one, potentially look for better entries in the future, because this is going to be a name that needs to grow into its current valuation. But again, very, very solid movement to the upside so far, but I would expect some choppiness at these highs here. We also have a new partnership development with Palantir as well. Palantir and the nuclear company partner to launch platform to rapidly scale nuclear development. Again, more positive growth here. They are significantly growing their government contracting business as well as their commercial revenue. Fundamentally, this company is in a really, really strong spot, and the market has just continued to bid this one up, continuously pushing this valuation even further. Now, moving on to this next one here, Sofi. Now, those of you guys that have been paying attention here, I think you guys have kind of just seen this play out time and time again at this point, but we have been talking about this weekly breakout here on Sofi from around this lower range here at around 1360 over the last couple of weeks here, really starting in the beginning of June. And what I did say was that if we were able to continue closing near these highs, especially from that second week of June, we could easily see this slow grind up into the mid 16s and 17s really over that next month and a half. Now, this is actually playing out a little bit sooner than I would have expected it to, but we do have a very nice target here short term at around 1709 for Sofi. So for those of you guys that have listened, I know I saw a lot of you guys in the live stream today commenting about how you did take advantage of this move to the upside. Congratulations. We definitely could see this continued move to the upside, especially with a broad market here that is dangerously close to breaking these all-time highs that you guys can see right up here. Now, moving on to the next name here, we are going to be talking about HIMS. Now, this one is having a very solid move to the upside here today, currently up about 12% at the current time that I'm recording this. But again, that chart right here, you can see this massive gap down was obviously the result of Novo Nordisk halting Wegovy sales on Hims and Hers, claiming deceptive marketing. You have seen Hims kind of hold their ground here and say, yeah, we're going to continue operating under kind of what we see as the correct legal practices here. Again, for those of you guys that don't know, compounding of these GLP-1s is now no longer allowed, but there is a legal gray area in which a corporation like Hims can offer compounded versions, or effectively the knockoff versions of Novo Nordisk Wegovy here, if they do kind of fit into a custom tailored product for the consumer. So again, there is kind of that gray area. Hims is holding their ground here. And obviously for somebody like Novo Nordisk, they don't necessarily want a company that they are partnered with kind of also offering a competitive product there. And looking at this chart here, again, Hims is an incredibly volatile name, and I personally would say that this one is not out of the woods yet. Now, for those of you guys that understand kind of how I view markets here, I look at everything from a probabilistic perspective and what would I expect to happen over time. Now, when I see charts like this, these are typically ones that I want to stay away from in the short term, wait for them to develop and really form a solid, strong base. It is really only 3 days after that news came out from Novo Nordisk kind of taking Wegovy off of Hims, and I would like to see a couple more days here to make sure that Hims is actually done selling off, because if it isn't, you easily could see a continued drop down to that upper 38 area or this 200 EMA right at around 36.50. Now, Hims is definitely one that has shown a significant amount of growth over the last couple of years, and if they can continue on that trajectory, they're definitely going to have success over the long run here. And I think something that new traders or investors or just new individuals to the market really make the mistake of is thinking too short term with a lot of the investments that they've made, because they're going to see a lot of these stocks here go absolutely vertical and think that that's going to happen with every stock that they're invested in. There are always going to be some hiccups, some bumps along the way. And you always need to be thesis driven if you are a long-term investor. If the thesis remains intact, there is nothing and no reason for you to act or make any rash decisions in the short term. Now, moving on to the last name that I want to talk about here, that is AMD. I like to lovingly refer to this one as my baby. I own a bunch of shares of AMD at $11.39. One of the best investments that I have ever made here. And this one is starting to come back from the grave here, moving back to the 140 range that we have been talking about over the last couple of weeks. Now, we easily could see this move up to this 150 area, but as I've said before, and I will say it again, I actually was considering kind of trimming down a little bit of my AMD position after my covered calls from last year expired, I believe, last week. But I do think that this one is going to be an absolute monster and continue to outperform over the medium to long term here. They are continuously entering into new partnerships, continuously innovating. AMD landed strategic alliance with HCL Tech to serve enterprises. Again, they landed this partnership ranked number 16 on CRN's 2025 Solution Provider 500 list, as it ramps up channel investments to continue putting pressure on Intel in the CPU market and challenging NVIDIA with increasingly powerful data center GPUs for AI. So again, AMD continues to come out with good news and continue really innovating, like I said before, and I still think that this one has a lot of room to the upside. Now, guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, make sure you guys are subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. And for those of you guys that are taking advantage of, honestly, quite a ridiculous sale that I'm offering you guys to hop into the Less Trades, More Profits community, welcome. I can't wait to see you guys become one of our many success stories. But other than that, guys, I will see you guys later. Peace.